Alright, today I want to do something a little bit different. I didn't trade today, but I kind of know what happened in the market. But I want to go back and pretend as best I can that I am looking at this market from the right edge. And I only going to give myself 3 trading opportunities. I haven't looked to see if the 3 trading opportunities, if I'd have won or lost. So in that case, I don't know. I mean, I know the market went down. I know the market went up. So I kind of know what happened. But I also looked at the opening range as well, and I know that I like the opening range, and I've already marked off the 805, and the 830 on the charts already. So I have already done that when you're looking at the charts here. Now, this blue bar right here, and this is stuff pre-market that I would already know. This is the highest blue bar volume coming into the market prior to the trading session starting at the 8 o'clock mark, or the CL port strategy that I like to put on. CL port when I like it. So opening range trade, ORT, open range trade. So this is a blue bar volume. So what I would say to this is that I would be more of a seller than a buyer with that particular. Now we see it came in here and it looks like the market topped out right about there. I don't know if that's the top at that point in time, but right now 57.98 highest volume bar. So this is what I would call BBVHVB. Stands for blue bar volume, highest volume bar. All right, so let's move on. Now the highest red bar came in at 610. It's pre-market, I should say, and it's 1187. So the difference between the two is 1,387 as far as highest blue versus highest red. So I'm still would be a better seller than buyer. I do know that as the market opened up, there was an opportunity to look at a short that was not filled. So this is your morning. This bar should be at 830, not there. We'll put it on in just a second. So let me just double check that that's at 803. Move that back to 805 where it's supposed to be. Somewhere around there, I think. Yeah, 805. Okay. So this is the market as it opened up here. So here was the high up here of the. Let me double check. No, it's 757. So this thing got moved a little bit. So there. So this is the opening range right now. So we talked about opening range and how I would look at it. This opening range is a decent opening range is what I'm going to get at right now. This is kind of a medium box, so it's tradable if you can find a decent trade setup in here. Now, knowing I have a BBV and it's at 25.74, I have these red bars coming into the market to start off the morning. So I have the 2 reds and a 1 blue. Now, this red bar is roughly at 1300, I think, somewhere in that area. And this one opens up. So these two are kind of, if you're looking at just the session itself, this would be the tiebreaker, and this is the tiebreaker itself being if there wasn't any high volume bar previously, would be in a tiebreaker, and then this would break the tie and you'd look for the long signal. But knowing that we have a high blue bar volume back there, I want to pay attention to that and not trade along based upon just jumping into the market. So the only trade that I would tell you that I'd be looking for in the morning would be a short. Now, here is your bar, and it moved. This was the low was 57.57. So my entry point would be 55, which was not filled. So my opening entry to short the market would have been at 57.55, and this wasn't filled. The market moved up. Now, what I like about it is if I wanted to get long, this would have probably been the long opportunity right above here, but the blue bar volume back at 430 is going to keep me from being in any long situation until it proves that it wants to go up at this point. So what does proof mean to me? It's probably here plus a 1p move. So 57.86, I'd probably want to see the market get up to at least 58.02 or so, somewhere in that area. Kind of prove to me that it wants to go up, and hopefully we'd see some volume kick in the market right now. So at the 8:30 mark, what I can tell you is I would have had no trades on at the 8:30 mark. My only trade opportunity would have been a short here, but it was not filled. After 8:30, I would want to be short. I would look for an opportunity to get short still with current volume, and you see this is kicking in here. So on this up move, we see this move right through here, and then you see the offsetting of that over here. So what I'm looking for is a 1, 2, 3 setup to get in. So I don't see it. It comes down here, it stops, it comes down, it goes back up. Still no 1, 2, 3. The first opportunity to get short would be roughly right here. So my opening trade, it looks like, would have been 2 ticks under here at the 8:49 mark. So, and let me show you that. So right here is 1. This comes down through here and finally crosses over here. Here's 2, there's 3. So I'm looking to short right under here. It looks like I'm in here. So let's see how this would work out. Opening trade. This would have been trade number 1 for me. And I don't see anything that's offsetting that 2500 volume bar that we had at the 430 mark. So opening trade would have been 57.58. So I'm in at 57.58. Today is 13.1, so we'd be risking 14 ticks per trade on 1R. 57.58, let me plug that in. And I'd be running with a stop of 57.71. Got close, right? When it got here, I would tell you that I'd have moved up one more and been at 15 ticks. 58, and I would have forced it to bring me out at 72. So just so you understand, I'm not manipulating this data. There's 57.58. I come in 2 ticks underneath here, 59.58. Now, even if I got a slippage down here at 57, I still would look at the 72, 71 exit point. Here's the exit point on the 1R. And then once it came here within a tick, it went up to 70, 71. When I saw this and it went down like here, I'd move up 1 extra tick and force the market to run me up and run me off. So you do see that I collect this here, and here is the first time we see a red bar volume that's higher than the other blue bar. So here is where, well, let me move this over because I'm talking. So right here is my red bar volume. So let me screen draw this right there, and this is where I would be danger, danger, Will Robinson, or is the down move over, and this is where I would tighten up my stop. So let's see what we had here. So 57.58, the first target on the down would be 42. So it's roughly right here. So there's a 1p move. A 2p move brings it to 26. And a 3p move is 10, which doesn't look like it just touched it maybe. Let's find out if it touched 10. I think it might have touched 10 there. This would have me concerned, and I would be looking to exit the trade probably at the 1p mark. So this is kind of how I would have set the trade up. I got the 2p moved, it went down to almost 3, and I probably would have been looking at a 1.5p move on the way back up. 1.5p would put it at 34. It looks like I would have been stopped out roughly at that area right there. So trade number 1 would have got me stopped out roughly at that level right there. And that would have been worth about 24 ticks, roughly. And let's see here, it went down to, yeah, it went to 57.10 and not through. So it would have not filled this entry. It just touched it and moved off of it. So in real money trading, that would have not been filled. So I would have exited up here at 34, and if it took 1 tick stoppage there, then I would have had plus 23, plus, would have been, let's just call it a plus 20 trade. So opening trade for me would have been plus 20, and then I'd been looking at this RBV, HVB, highest volume bar, is red now. I want it to, when I'm trying to get in a long, I want to wait for the 200 bar to cross over, come back underneath, and then cross. So I'm looking for something like that. And we also have the pivot point too. So let's see if there was a trade number 2 in the session. No, it went down. So it barely took me out at the 34 mark. And if I would have had 1p, I would have stayed in the trade. So I would tell you that I would have went to 1.5p on this move. So I would have most likely missed this move going down. And the move down went to a low of 56.82, which brings it into about a 4p move down. So it was about a 4p move down, which today was equal to 64 ticks, about $640 if you would have been able to capture the whole move. I got about, let's say I got about 22 off of my move, and I would be looking at that or a failure. So if I wanted to get involved in this, again, I'd be looking at a failure. This looks like a GAN signal, and I might have caught this on a GAN. So that might have been number 2 trade on a GAN. So let's look at this quickly and see if that would have been a signal to get in. Now, what do I do on the GAN? What I do is I get a vertical line and I measure the low against the high, and I see if we're going to get through it. We barely cross across it here, so here's where I find value. Looking to short the market here, since we're not going to go across, and we didn't break across the 200 bar, and this market took 23, it's about what, 5 minutes that it moved back and forth, and I would be looking at a GAN signal to get in. Measure it based on the second time through, roughly right there. Let's see here, 1, 2, 3, 4 coming through. this would have been an entry point for me right here underneath this. 1, 2, 3. So 24 coming down to 82. Probably just a break-even trade on that though. I might have got a 1p move on it. I may have not even got anything on it. So this would have been trade number 2. Question is, was there a trade number 3 to catch the long? And I don't see the Wyckoff stopping volume on the down. Let me move this off out of the way and look. No, I don't see stopping volume on this down move, so I wouldn't have been involved in the long. I would have waited for it to cross over the 200 bar. I would have been real cautious about entering through here. The question is, would I have seen this move right here, the 930 to 939, and got long right here? I doubt it. I don't see myself fighting the downward movement until after it crosses up and over your 200 bar, comes back under it, and then so the first opportunity that I would have looked at along looks like roughly here, and this would have probably been trade number 3 roughly in this area. Now, would I have got involved in front of the pivot here? The pivot, how many times have we ran pivot today? We went down through the pivot, and we came back up through the pivot. Honestly, I probably would have not traded this entry right here based upon not having enough room to pivot. But I would have, if I was looking, I would have got involved in it here. 1, 2, 3, 4th time through. Here is where I would have found value to be roughly 2 ticks above here. So probably looking at 57.51. Somewhere in this area, 57.51, 57.52. And it's easy to say what I would do now, and that looks like that was nothing more than a break-even trade. So on 3 trades, it looks like I would have had a winner at plus 20, perhaps, and 2 break-even trades today is what I would tell you if I was perfect today. And this is me being perfect and following the way I should follow it. So it looks like it could have been about a plus 20 move today for me, somewhere in that area, on 3 trades, just trading 1 contract. I hope this helps you. I know it's hindsight and it's woulda, shoulda, coulda type of crap, and it doesn't really, but if I follow the way that I should be trading it, I would be looking long after it crossed back up over that 200 bar SMA as it moved across down. So I don't like to catch a falling knife on a short. I mean, when the market's trying to go long. So I would tell you that I'd stay away from a lot of those false signals that we're trying to break out. I'm almost I'm telling you that I'd be positive on the day, probably around 20 ticks. That would probably be best case scenario right now, the way that I would handle the trading of the markets. I would stop after that 3rd trade no matter what. So 3 trades, I'd give myself, a goal of a trading day. I like to get at least plus 50. I want to get a 3p target. And we got within 1 tick of hitting it on the 57.10. I might have moved down and captured 10 ticks in there. So that's probably what I would have handled. The 57.10, if I've been right on it, I could tell you that I probably would have moved down to the 2P move and taken out 32 ticks on that move coming up, or taken would have been 38. So I probably would have got somewhere around 32 to 38 on that first trade, and I might have just quit on the day at that point if I didn't see anything that I like. That was probably, and if I would have caught anything else, it would have been that GAN signal coming down and taking that second short, and I doubt that I would have taken on the third trade at that point. So, best case scenario, probably around 40 ticks, 45 ticks would have been best case scenario today. I'm pretty confident that this could have been a winning day of at least plus 20. This is Dave Knight here from 123daytrade.com. I'm doing this for my own benefit to see, looking back at the day and see how I should handle it. I've been doing this now for, I do this pretty much every day. And I would recommend that you do this as well. And you're trading, that you go back and you try to use your trading strategy against the market. You know, and you don't win them all, obviously. I know I don't win them all. But you're going back and you have hindsight working in your favor, so you kind of know what happened. So it's hard to get away from that disbelief, or the belief of that you know what happened. But I know how I handle highest volume bar. So when in doubt, I always follow highest volume bar, and I like to trade the short over the long. But I try not to discredit every long signal that I see. So that's about it. I'll talk to you on the next video I put together. This is Dave Knight here at 123daytrade.com. Thanks for watching. Thanks for being here. Obviously, I hope this helps you, but you know, I know it's hindsight. I know it doesn't mean diddly squat as it relates to real money trading. All right. God bless. Take care. I'll see you next video I put together. Bye for now.